right? I'm going to break it down step by step. So make sure you guys are taking notes, and we're going to get started with the very first example. Now, before I show you the example, I'm going to literally break it down how it works, okay? Now, if you're a beginner, if you are a beginner, you guys should know that there are essentially two types of trends, right? Uptrends and downtrends. Now, this particular strategy is for you to be able to catch the swing move in the opposite direction, okay? So for example, let me just go ahead and draw out a little trend line for you guys. Just give me a moment, right? So let's say we got this kind of uptrend, right? We got this uptrend, cool. Now, the purpose of this strategy is for you to be able to catch the swing to the downside. You want to get in on the swing move down, all right? So how are we going to do that? I'm going to show you guys. The first element to this strategy, guys, is to identify a trending market. So if it's a uptrending market, you want to sell. And if it's a downtrending market, you want to look for the buy, okay? So uptrending market, you want to look for the sell. Downtrending market, you want to look for the buy. Now, typically when it comes to trading, when you're trading a trending market, you will find some wave analysis. I don't want to get too technical for the beginners, but wave analysis is essentially structures within the market that are formed, which essentially give you a signal as to what direction the markets are going to go in. And the one that I follow most often is known as the Elliott wave. So if you're on TradingView, if you refer yourself to the pattern section and you scroll down and you find where it says Elliott's impulse wave, you can find what is an Elliott wave. And an Elliott wave behaves like this. So there will be one drive in the uptrend, then there'll be a retracement. There'll be a second drive in the uptrend, then there'll be another retracement. And then there'll be one final big push on the upside. And then what that means is the Elliott wave is now completed. What happens after an Elliott wave is known as a correctional wave. So the market corrects its actual, wave pattern, and it changes the direction. So it starts to go down, okay? And you're going to see something like this. And what we're trying to do is we are trying to essentially get in right here for the sell, okay? And literally just do the opposite thing for the buy, right? And that's where we're trying to get in. And that's the ethos of what this strategy is really, built upon. And I'm going to show you with real life examples how you can use that. But that's the first step. So let me clear out everything and make it look as simple and neat as possible. Right. So if I take this back over here, let's just say, let me go and delete this, right? Bang. Cool. What kind of trend do we have here, guys? Clearly it is an uptrending market. Why? Because the highs are higher than the previous highs, right? The highs are higher than the previous highs, and the lows are higher than the previous lows. Okay, and as you can see, there are waves formed in the market. Now, what I like to use is the line chart over here. So you can find it on the top left on the TradingView. The line chart tells you the reality. Yeah, candlesticks, they have these wicks that show you the manipulation of the banks, but the line chart shows you the reality. And the reality is right here. It is a nice structured wave. And so what I'm going to do is I'm going to go ahead and I'm going to draw my Elliott impulse wave, guys. I'm going to draw my Elliott impulse wave. So let's say I'm just going to go ahead and start off with down here. So we've got this one drive, and then it came back down, retraced. We had another drive, second drive, which was pretty massive, and then it retraced. And then we had this third drive over here, right? As you can see, nice and simple Elliott wave, okay? What I'm going to do next, so this is the second step now. We've identified a wave analysis. Obviously, what we're trying to predict is we're trying to predict the correction wave that's about to come next. So something along the lines of this. That's what we're trying to look for. We're trying to catch the move down. So what we're going to do before that is we're going to draw a trend line lining up the lows because we're trying to catch the move down. Okay, so if it's uptrend, you want to line up the lows. So what I'm going to do, I'm just going to get a trend line and bang, I'm going to put all the lows together. And as you can see, the market respects this trend line several times. 1, 2, 3, 4, 5, 6 times it has bounced off of this trend line. Therefore, I know that it is a valid trend line. Now, what I need to see is this. So the next step is I want to see that the market breaks through my trend line. You see this trend line over here? I need the market to come down and break right through it, okay? So let's wait until that actually happens. So I'm going to trade as if this was a live market, all right? So I'm not entering nothing yet. I want to see a break of the trend line, okay? So let's see what happens. It's moving, it's moving. Let's try to break it, bang. There you go. It's just broken past my trend line, okay? Cool. So let's recap. First of all, what did we do? We found the trend. So in this case, it was an uptrend. Second of all, what did we do? We found the wave analysis, which we were using Elliott waves. Third, what do? We drew up our trend line and we wait for the break. We waited for the break of the trend line. As you can see, the market broke the trend line right there. So those are the first 3 steps. The fourth step now is this. We're going to turn on our indicator and we're going to essentially use moving averages to identify whether it is the correct time to actually enter the market. So I'm going to turn on one of my indicators right now. Well, I'll turn on both of them. Okay, just give me a second, guys. Indicator is loading. By the way, guys, can you hear me? Because it says my internet connection is unstable. All right, cool, perfect. Guys, if you have questions, yeah, I'm actually going to be answering all your questions at the end, so just save it. Don't worry about that. If you guys can hear me, I'm just going to continue. Awesome. So the fourth step was turning on my indicator, which is a 50 moving average, a simple moving average. Now, as you can see, my indicator is blue and white, okay? Where it is blue, the indicator is telling me to buy, and where it is white, the indicator is telling me to sell. Now, obviously, I'm trying to look for the sell position, right? So I need my indicator to be white for this to be valid, okay? So as you can see right here, the indicator has just turned white. It's just now turned white. Perfect. That is what I'm trying to see. So perfect. That is my fourth step done. Indicator turns white for my sell. Final step, guys, is we want to see a crossover. So what I'm going to do is I'm going to activate my other moving average, which is right here. Bang. And this one is a yellow color. Let's wait for that to load. Here we go. Cool. As you can see, they have not crossed over just yet, right? The yellow one is above and it hasn't crossed over. I need the 2 indicators to cross over for this trade to be valid, okay? So I've got the other 4 steps. I need the final step. Let's go one more candle further, one more. It's getting closer, as you can see. It's getting super close now. Bang, it's about to connect. Boom, they have just touched each other. I am now ready to enter my trade. Cool, so obviously I'm selling, so it's gonna be a short position. So if you're brand new, guys, go to the left-hand side where it says prediction and measurement tools. If you are selling, you want the short position. And if you are buying, you want the long position. So let's click on the short position, boom. And so naturally, we're gonna enter on this particular candle, right? We're gonna enter on this candle where the market is just crossed over, where the indicator has just crossed over. Now, how are we gonna work out our take profit and stop loss? Now, our stop loss is gonna be the previous high, guys. It's gonna be the previous high. So sometimes I like to use the line tool to identify where the previous high is. And easily I can spot it right there. That was my previous high. So I'm gonna bring it down, bang, to my previous high, okay? And then my take profit is gonna be the next low because we're selling, right? I wanna get the previous low. And the previous low, as you can see, is right here. So I'm gonna drag this down to the previous low, like so. Awesome. Now we enter the trade for a sell. We've got our stop loss, so we manage the risk. We've got our take profit. This is a nice looking 1 to 4.15, decent, right? So if you're risking 2% of your account, you're gonna get back 8.5% of your account, which is insane, all right? So now let's see what actually takes place. I'm gonna simply click play. I'm in the trade now. Wow, straight into profit. 0 drawdown, guys. 0 drawdown, bang, smashed TP. Literally didn't go into drawdown once. You lost nothing from this trade. You just smashed 190 pips in one direct straight move using those steps, using that strategy, right? You guys are probably thinking, wow, that's crazy, right? I know, trust me, I know. So there you go, easy 8.5%, you know, secured in your account, right? And that is how you want to look at your account, guys, in terms of percentages, right? 8.5% easily secured. I'll give another example. In fact, I've got several examples for you guys today. A lot of you guys like gold. Who likes gold here, man? Go on the chat box and just type in XAU if you like gold. If you guys don't like gold, I'm not going to show it to you. Sheesh. Everyone likes gold. Taz, bro, I'm going to answer all your questions at the end. Don't worry about it. Gold, gold, gold. All right, cool. Say no more. Right, for my gold lovers, check this out. This strategy works on gold too. And it works like a freaking charm, guys. It works like a charm. All right, check this out. Let me start it fresh. Let me start this whole thing fresh for you guys. In fact, let me delete everything here so I can just show you guys. We're going to do some live analysis, some live trading over here. So let's say I'm just going to go ahead and start this thing here. Cool. Right. So I'm here in the market. I'm on the hourly time frame. What do you see, guys? You see a very clear downtrending market, right? Lower lows, lower highs, easy to spot. We also see a very simple Elliott wave, right? I'm going to show you guys. Look, one drive, yes, goes retraces. Two drives, retraces again, and bang, third drive right there. Elliott wave is now completed. We're now expecting the market to now reverse and go up, okay? So I'm gonna write out for you guys again. So number one, downtrend this time. So the trend is a downtrend. Number two, wave analysis. As you can see, it's so straightforward, guys. The Elliott wave is so easy to understand. Number three, we need a trend line break. Right, so let's draw our trend line, okay? So I'm gonna grab the line tool over here. I'm gonna take it from this high all the way to these highs. We're doing the highs this time around because why? We're looking to buy, guys, because it's a downtrend. We're trying to catch the swing. We're looking to buy, okay? So here is my very nice looking trend line, okay? Awesome. So now what do I need? I need the trend line to break. So what I'm gonna do, I'm gonna wait for the market to break past this trend line, okay? So let's wait, let's wait, let's wait. Let's see if it breaks past it. It should do any second now, bang. Okay, just about trying to break through. Okay, now it's definitely broken through. Here we go. We've easily broken past our trend line. Awesome. What's step number 4? We need our indicator this time to be blue because we're looking to buy, guys. So white is sell, blue is buy. Right, let's turn on the indicator and let's see what we're looking at. Okay, let it load. Okay, awesome. It is blue, guys. I can confirm it is blue. So that part of the confluence is complete. Final part is crossover. This is the best part, guys. We need to see the market crossover. So let me turn on my other indicator. Okay, it's not quite crossed over yet. It crossed over here, in fact, but I didn't enter just there. In fact, you guys could have entered here, to be fair, because where you see the crossover, it is blue. And also, the market is actually higher up as well. So technically speaking, you could have entered right there where the crossover took place and where it broke the trend line. Yeah, you could have done it right there. Stop loss, previous low. Take profit, previous high. We could target this high, for example. We could even target that one. Let's go with this one for now. And then let's see what happens. Okay, in profit, bang. Smash, take profit. Again, barely any drawdown. Easy. Easy 1 to 1.2. Okay, decent trade, fine. Now what's gonna happen, guys? It's gonna be the start of a uptrend, right? And what do we do on an uptrend? We look to catch the sell, okay? So the same story happens again. Check this out. Let me get rid of this. Let me actually minimize it a bit. Check this out. Okay, let me get rid of everything, make it nice and clear. Right, again, we have another Elliott wave. Look at this, check this out, look. 1, 2, 3, bang. 3 drives yet again. I'm going to draw another trend line with the lows this time because now we are looking to sell. We're looking to sell, all right? So here's my lows, here's my trend line, right? Lining it up nicely. I activate my indicators. I need it to be white because I'm trying to sell. Right now it's blue, that's not good. I need it to be white. And I need the crossover to take place as well. So let's see, does it turn white? Cool, right now, right here, guys, as you can see, if I zoom in a little bit, it has turned white. The indicator has turned white and the crossover is just about to take place and bang, here we go. It has just crossed over. Beautiful. So we're gonna enter this trade for a sell, right? We're entering on this candle and the previous high is gonna be the stop loss, which is just here. And the previous low is gonna be the take profit. So we could take it to this one or we could take it to this one, right? And then let's see what happens. Okay, it's drawdown, 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 bang. Smashed through take profit. Again, another win. You're just winning after winning. You know, if you held it for a bit longer, you could have got probably a 1 to 2. Yeah, there you go, a nice 1 to 2. If you know how to trade institutionally, you could have even got a 1 to 6 if you had your institutional, knowledge. I'll give an example. And by the way, if you're a beginner, don't get scared. This is just for my advanced people on the call. I'm going to go to the 15-minute chart, yeah? Same thing that we were looking at, 15 minutes. Let me turn everything off. If you know institutional, you should know that this right here is called a order block, right? This is an order block. And as you can see, you could have simply entered on the order block right here, you could have entered on the 50% of the order block. Your stop loss would have been the fill of the imbalance, and then your take profit would have obviously been the previous low. And now look, holy crap, a 1 to 16.5. Guys, if you risk 2%, you would have just made 33% of your account with that one trade. Are you mad? Imagine if you have a 100K account, you just made 33 grand. Yeah, I'm going to talk more about your account and compounding in a moment. But you can use your advanced institutional knowledge to actually find even greater risk to rewards. And guys, I could do this all long. You guys get the point. Let me just exit it all out now so I can just show you a couple of last examples with gold, right? So again, what happened this time? There is a downtrend right here, as you can see. There's a downtrend right here. Bang, where the market crosses over here for the buy. It's blue, as you can see right there. So we enter there on the crossover. Previous low is here. Previous high, we can take it to that high, or we can take it to this high as well. And bang, as you can see, a very juicy 1 to 6.5. So if you risk 2%, you get back 13% of your account, guys. That is insane, you know. And I can go over this example over and over again. Let me show you some examples of the trades I caught this week, guys. This week, all right. Check this out: Australian dollar, Japanese yen. There was an uptrend. Market crossed over. I caught the swing low. Market crossed over. I caught the swing high. Easy, easy money, guys. Check this out. Bang. Crossover takes place right there. I enter the market. I just caught a 1. This is a 1 to 12. Imagine that, a 1 to 12, guys. It could have been tighter if I wanted it to be. I could have made it a 1 to 20, but a 1 to 12, bruv, you're getting back 24% of your account if you risk 2%. That's how insane this strategy is. Another example, Euro USD, right? Here we go. Downtrend, crossover, caught the buy. Another downtrend. I'm sorry, this was an uptrend, caught the sell. Another downtrend, caught the buy. Like, I've been just banging this out ever since I discovered it and just catching pips, and so has my team. You know, another example, this is GBP JPY. So this works on all Forex pairs, by the way. You had this big uptrend, right? You had this wave analysis completed, bang, you caught the sell right here, where the market crossed over. Previous low is there. You take it to the next, previous high is there, take it to the next low, bang, you caught a 1 to 8.36. Again, guys, you risk 2%, you get back 17% of your account, right? And I can just show several examples. Here's another one from this week. This one was the Mexican peso. So this works on the minor pairs, the fruity pairs, whatever you want to call them, right? Exotics, yeah? There you go. 1 to 7 right there. Yeah, finished the downtrend, caught the swing high, and then, you know, finished an uptrend over here, caught the crossover right there. The market crossed, the indicator crossed over, caught the sell down, caught another cheeky 1 to 4 as well, right? Bruv, Euro GBP is my favorite, one of my favorites right now, because look at this, look at this, look at this. Look at the wins, right? I've just been murking it like down, the uptrend, caught the sell down. Downtrend, caught the buy up. Again and again and again and again and again. If I add up all of these, that's probably, you know what, that's probably 100% of my account, yeah? So since, you know, the end of May until now, in 2 weeks, I've made double my account with just Euro GBP. That's how insane this strategy is. And I can show you examples all day long, guys, but I don't want to waste too much time. You get the gist, you get the point.